This is the luxury world. Get inspired with us today and tomorrow. In the world of luxury, there are few things as coveted as a fine timepiece. For centuries, luxury watches have been synonymous with elegance, craftsmanship, and prestige. However, current trends suggest that the tide is turning in the luxury watch market. After years of soaring prices, the value of many luxury watches is now on the decline. This shift is due to several factors, including changes in consumer preferences, economic uncertainty, and increased competition. As younger generations enter the market, they are showing less interest in traditional luxury symbols and more interest in sustainable and ethical brands. Despite these challenges, there are still many people who appreciate the beauty and craftsmanship of luxury watches. And while prices may be declining, these timepieces are still a valuable investment. For those who are looking to add a touch of luxury to their lives, a luxury watch is still an excellent choice. In today's video brought to you by the Luxury World, we will explore the different factors that contribute to the decline of prices for luxury watches. To assist watch enthusiasts in comprehending the downturn in the 2023 watch market, we aim to shed light on the influences that impacted the prices of luxury watches this year. We will identify key indicators that have been observed or could potentially emerge as signals of negative growth. We will explore the implications for collectors and express our perspective on whether watch prices are likely to persist in their decline or potentially rebound in 2024. If you still have not subscribed to our channel, make sure to do it now so you can stay updated on our future videos. In 2023, we have witnessed a surge in global instability coupled with economic stagnation, inevitably exerting pressure on more affluent sectors. Throughout most of this year, the luxury watch market has experienced a notable decline. Highly sought-after timepieces like the Rolex Daytona and Audemars Piguet Royal Oak, previously trading at peaks of $50,000 for Rolex and $100,000 for AP, are now fetching half those amounts. This financial downturn is not confined to just a handful of exclusive watches. It has permeated the entire industry. The impact is so widespread that numerous watch dealers worldwide are grappling with significant financial challenges, leading to layoffs and, in some cases, business closures. These dealers, once handling substantial inventories of luxury watches that moved swiftly, suddenly found themselves compelled to unload their stock, hastening the industry's overall price decline. As with all facets of life and established markets, fluctuations are inevitable, but eventual equilibrium and stability are anticipated. Currently, the prevailing trend suggests further instability in a declining market. Let us turn our focus to the several factors influencing the decrease in luxury watch prices in 2023. First on our list is the investors exiting the luxury watch market. Commencing in 2020, the luxury watch market experienced a surge. Brands such as Rolex, Patek, and AP became extremely elusive, with pre-owned prices surpassing retail values even at trade-ins. This lucrative opportunity for capital gain attracted numerous new investors to the watch industry, many of whom were not genuinely interested in the product itself. With the market now undergoing a downturn, these transient investors have subsequently departed. Moving on, excessive inventory also plays a factor. Throughout the peak of the watch market in 2022, both authorized and gray market dealers gathered substantial inventories. As the luxury watch market began to subside, a cascade of over-leveraged dealers, particularly in the gray market, urgently sought to offload their excess inventory. The rapid overflow of discounted watches into the market had an instantaneous and widely acknowledged effect on the global watch market, marking what many perceive as the initiation of the sharp decline we have observed. This goes hand in hand with the third factor, which is the impact of inflation. In 2023, the noticeable increase in the cost of living compared to previous years has been evident. Necessities such as groceries have seen a rise in prices, affecting households universally. Inflation stands out as one of the fundamental contributors to this phenomenon. As the costs of essential items escalate, there is a reduction in available funds within budgets for unrestricted spending on desires. This has a direct impact on the luxury watch sector, as a decrease in available funds in the market translates to a decline in demand for such products. Moreover, we may consider the interest rate impact on the luxury watch market. It may come as a surprise, but numerous gray market dealers acquire their inventory through credit or external investment. Consequently, the longer these dealers hold onto their inventory, the greater the costs they incur. The recent increase in interest rates has added to these expenses. As a result, online or gray market dealers are either restricting their purchases to lower-priced inventory or swiftly liquidating their stock at discounted prices. Lastly, different worldwide events are also one of the key factors to look at. In times of heightened uncertainty, human behavior tends to become more cautious and inclined toward exploring the latest trends or norms. The recent occurrences of significant global events marked by violence have put nations on edge. This heightened sense of uncertainty translates to a tightening of spending, resulting in fewer available resources to sustain the luxury watch market. Now let us take this time to discuss the signs pointing to the softening of the luxury watch market. 1 is the watch dealers going out of business. The watch industry experienced a significant surge in the emergence of new watch dealers, primarily online, during the watch market boom. However, with the subsequent decline in prices, a substantial number of these operations have either shut down entirely or implemented substantial layoffs. This suggests a diminished profitability in the watch business or a notable reduction in the volume of inventory being sold. Also, the decline in home prices is another sign. A dependable measure of economic health is reflected in home prices. Homeownership holds a fundamental place in the hierarchy of family budgets. When home prices decrease, it typically signifies that current income levels cannot sustain the prevailing home prices. In turn, if incomes are insufficient to support current home prices, the capacity of incomes to afford luxury watches diminishes. Moreover, we will also take the decrease in Rolex prices as one of the important signs. The benchmark for the luxury watches market is the pricing of Rolex watches. There was a time when every Rolex reference was fetching higher prices in the pre-owned market than brand new at retail. Some models even commanded 2 to 3 times their retail value. However, in 2023, there has been a notable drop in the prices of used Rolex watches, coinciding with a rise in the prices of new Rolex timepieces. As the cost of pre-owned Rolex watches declines, other brands will observe a similar trend. Above all the things we're discussing, this leads us to ask ourselves about what implications this holds for watch collectors. A declining luxury watch market will impact collectors in varying ways, primarily depending on their approach to collecting. There are 2 main categories of collectors: those with sufficient disposable income to expand their luxury watch collection without selling, and those who rely on selling from their collection to fund new acquisitions. For collectors who retain their watches, possessing ample disposable income to consistently add to their collection, a downturn in the market is advantageous. As the luxury watch market softens, their purchasing power increases, allowing them to secure better deals and expand their collection within their budget. Conversely, for collectors engaged in buying and selling, who maintain a restricted number of watches in their collection, a downward trend in the watch market translates to diminished buying power. Since they need to sell watches to fund new acquisitions, the reduced value of their sales limits their options. Consequently, selling a watch for a lower amount holds back their ability to purchase new ones. Before we end this discussion, let us also take this time to talk about the prediction of luxury watch prices. Predicting whether the prices of luxury watches will continue to decrease in 2024 is challenging, but a thorough examination of present market indicators indicates a continued downward trajectory for the luxury watch market into the coming year. To improve conditions, the luxury watch industry can take specific measures, such as refraining from price hikes, implementing more effective inventory management practices, and concentrating on introducing new products aligned with customer preferences. What are your thoughts about the topic we discussed in this video? We would like to see your answers and opinions in the comments section. If you liked this video, we will be glad if you let us know that too in the comments section below. Do not forget to follow us too and give us a thumbs up if you liked this video. Once again, this is the Luxury World, and we look forward to seeing you again in our next videos.